Well, it's been a wild week, one for the record books. On Monday, oil prices crashed over 30% in its worst one-day drop in nearly 30 years. Saudi Arabia is abandoning its long-standing policy of holding crude back from the market in an effort to win back market share. European markets gapped over 8% lower for their worst daily loss since 2009. And the Dow Industrials traded down 1,884 points 10 minutes after the open, and that was all on Monday. Then things only got worse. Italy quarantined the entire country, shutting down all but essential business activity, and that alone guarantees a huge hit to the Eurozone economy. It spurred a question in my mind when I was on the phone earlier about the EU's life expectancy. I mean, there's a lot of people who've said it's not about if, it's about when it breaks apart, and it's something like this kind of a black swan that is I think the perfect storm to break the EU apart. There's going to be necessary funding that goes into Italy, rescue operations, but that funding is going to run thin, and there's more than Italy that are going to need some sort of support. Now, as far as coronavirus, because one can remain asymptomatic for at least a couple of weeks, quarantines are unlikely to contain the virus. It's also unlikely that it's a one-size-fits-all vaccine. And this is despite a number of research laboratories and universities working on a solution, because corona is a single-strand RNA virus, so that makes it prone to mutation. Flu and coronavirus season may become the new norm instead of just flu season. Mainstream media, of course, will pounce on the virus not being containable while undermining the fact that its mortality rate in South Korea, who did act quickly, is around 0.6%, which I've read in reports makes it 15 times as deadly as the flu, but that's still a manageable number, of course. But at this rate, COVID-19's case fatality rate is below that of other viruses, such as SARS. SARS was at 10%, and MERS, which was at 34%. But the big difference here is that SARS only infected about 8,000 people, and MERS infected around 2,500 people. And that suggests COVID-19 is far more infectious. Meanwhile, the number of infections and deaths will climb exponentially before leveling off, adding to the overall fear-mongering. Shock sells and also causes market sell-offs as markets price in the monumental damage that is being done to the global economy from supply chain disruptions and quarantines. The Chinese Center for Disease Control stated that the coronavirus is airborne spread by aerosol rather than just being spread by droplets. Aerosol means transmission is by smaller particles of virus over vast distances. Just one infected person on the Diamond Princess cruise ship ended up infecting over 700 fellow passengers. They theorize that the virus was probably transmitted through the ship's ventilation system. Furthermore, the Chinese have been saying that they're spraying disinfectant into the air in Wuhan in the attempts to kill airborne virus particles. So the rate of transmission may accelerate in countries that don't act as quickly as South Korea. Namely, the US and the UK, they've been slower to act until recently, so the number of cases and the fatality rates could be far greater before leveling off. The Chinese tend to err on the side of information suppression, as we all know, when it comes to bad news about the number of cases and fatalities. So this report, which carries bad news, is probably somewhat accurate. Then on Thursday of this week, yesterday, circuit breakers were tripped again after the market found Trump's speech given late Wednesday unsettling, as he announced no new measures to improve the speed and breadth of testing across the country, while he imposed a 30-day ban on arrivals of people from Europe, deferred this year's tax deadline, and as well authorized $50 billion on loans to small and medium-sized companies. His claim that insurance companies would waive all co-payments for treatments was denied by the industry association. Meanwhile, the NBA said it would suspend its season. But in this parade of pandemic proportions, the Fed then announced it would increase the size of its repurchasing operations on Thursday in order to address the quote-unquote highly unusual disruptions in the treasury markets. The New York Fed announced plans to inject at least $1.5 trillion. They did that yesterday. And they added that it would conduct 1 month and 3 month operations of $500 billion every week for the remainder of the month. And this is on top of the at least $175 billion in daily overnight repo operations. The Fed's interventions come as market participants have worried about the difficulty of trading treasuries in the last few days. The announcement got markets to finally stage a rally off lows yesterday, but whether the market can sustain an undead cat bounce from here remains in question. And as we know, yesterday that rally was reversed, more than reversed by the close. In times of panic, markets do not care about support levels or moving averages. Our 620 strategy has been hugely useful in these volatile times for two main types of traders. You got the swing and day traders, where the 620 gets you into and out of your position, which boosts the odds of making quick profits as one can capitalize on the excessive volatility. And the second type of trader are the longer term position traders, in that the 620 can get you out of any position earlier rather than having to wait for a violation of a moving average. If one waited, one could still exit their positions after the market failed to bounce properly. That was confirmed on March 5th on the anemic bounce. That's when the market direction model went to a sell signal. One of the major ETFs it uses to track its profits and losses is TECL, so that sits at a profit of right around 40% as of about an hour ago, since it went to a sell signal. Now, in addition to all these record-breaking events, the 30-year U.S. The 30-year, sorry, 1 second. Okay, the 30-year U.S. Treasury bond broke below 1% for the first time in history, while the 10-year Treasury collapsed by 1/3 of its value. Now, over on the CME Fed futures side, markets are now pricing in nearly an 80% chance that we will get a 100 basis point rate cut, with the balance going to a 75 basis point rate cut when the Fed meets next week. A 100-point cut would bring the target rate down to 0 to 25 bips. Over in the UK, the Bank of England held an emergency meeting Tuesday where they cut its key rate by 50 basis points, so it now stands at 0.25%. The bank also said it will offer new term funding schemes with additional incentives for small and medium-sized companies, where over £100 billion could be allocated. The UK's GDP was flat in the rolling 3-month period compared to 0.1% growth in December. GDP was also flat on a month-to-month basis in January, missing forecasts for growth of around 0.2%. Total output production decreased 1% in the 3-month period. This is the 9th consecutive 3-month fall in output and the longest run of consecutive periods of weakness since an 11-period run that started back in September 2011. The chief UK economist at Pantheon Macroeconomics said, quote, "January's GDP data are weak enough to suggest that the MPC probably would have had to cut rates anyway later this month had the coronavirus never spread to Britain," unquote. Continuing the week, on Tuesday, President Trump pitched a 0% payroll tax rate for the rest of the year. On Wednesday, the WHO, that's the World Health Organization, officially declared coronavirus a pandemic. The head of the organization told reporters, quote, "We expect to see the number of cases, the number of deaths, and the number of affected countries climb even higher." WHO has been assessing this outbreak around the clock, and we're deeply concerned, most by the alarming levels of spread and severity and by the alarming levels of inaction, unquote. Also on Wednesday, the major U.S. stock market averages entered bear market territory, defined as a correction beyond 20%. A massive bear market in the U.S. would put a serious dent in the odds of the incumbent Republican president being reelected in the U.S. Of course, nothing could please the leftist-driven media more than that. But the low price of oil and the record low interest rates are hugely stimulative to businesses, as well as moves being made to reduce taxes and increase incentives for individuals and businesses. Major averages in the US could therefore find major lows sooner than later, since markets are forward-looking. On Thursday, the FTSE 100 had its single worst day percentage drop since 1987. It was down over 10%. Actually, I think it was worse. In the final tally, it was, I think, down 10.8%. So that made it the worst drop in history. On concerns that the global economy will seize up, in 1987, it plunged 10.8% on Black Monday. The ECB's decision not to cut rates by 0.1% yesterday also added to the selling pressure, though it did unveil other measures designed to stimulate lending. Ultimately, this virus will burn itself out, especially with warmer weather on the way in the Northern Hemisphere, but the world's reaction will end up excessively damaging the global economy due to the severe quarantines and supply chain disruptions. This will cost jobs, livelihoods, and as a result can spur second-order health consequences unrelated to the virus. The silent epidemic known as stress is a killer. While recessions can induce bear markets can also induce recessions, as they wreck investment psychology. So they have a tendency to put investors into a highly conservative and cautious mindset. Studies have shown the effects of typical recessions tend to last for several years after the recession has ended, due to the deleterious second and third order effects of lost jobs, diminished portfolios, retraining, bankruptcies, and withered savings. Nobel Prize winning economist Robert Shiller warned the market meltdown is far from over. According to Shiller, stocks in the economy are extremely vulnerable right now because the coronavirus panic has not peaked yet. Shiller spoke of how the disease is contagious even before it shows obvious symptoms, so it's going to be harder to quarantine people in this epidemic. He said in a recent interview, quote, "What we have now is really two epidemics. We have an epidemic of the coronavirus, but we also have an epidemic of fear based around a narrative that is not necessarily keeping up with scientific reality. And this narrative has been quite striking. It's a dangerous time for the stock market. It's highly likely now that we'll have a recession. It's already disrupting business. It's already causing people to pull back. We're not going to see creative new investments blossom in this environment," unquote. Well, yeah, indeed, on Thursday, stocks, Bitcoin, other cryptocurrencies, even gold, all were trading substantially lower. And today's bounce seems suspect. We're not really getting the volume that we should have, and we can already see on the major averages that they're starting to roll over. So in these times, short selling, basically the wins at your sales if you're trying to go short on a day-to-day basis, intraday basis. Certainly, though, we're going to be getting a lot more volatility coming down the pike. The VIX reached, I think, 76 or something, which is only shyly away from the all-time peak that it hit in 2008. I think in 2008 it peaked at 96, and yesterday it peaked at 76.8. So I think the next wave of news media pandemonium is going to probably come from the exponential growth in cases that we're going to witness in the US and the UK. Gil, how are you seeing this mad world?
I'm seeing it from a trader's perspective. How's that? I don't know. It sounds like you repeated all the news I was listening to and reading last night. So to me, it's irrelevant. You got to trade in real time. Anyways, this morning, you had several stocks rallying up into resistance. I actually came in and hit several stocks short. I'll just go through them real quick. When and why. DocuSign, it opened up. It actually was trading at 80 bucks, 80.81 in pre-open trade. And you can see here's the 5-minute chart, 620 chart. And once you got this cross here, that was a short signal. And I thought that was pretty reasonable because, you could set a stop right here at like 81 and change. So you're really like 1.5%. above your entry, and that worked just really well. So you get the quick move to the downside, and you get the MACD stretch here. So I cover, and I'm not short the thing right now, although I should have reshorted as it came back up in here, because if you look at this very carefully, you see these little tails start to show up on the individual 5-minute candlesticks. So you could come after it in here. And I actually did put a little out there, and then it came in like this, and I covered in here, but I should have stayed on it because you're going lower. But another one to look at here was also JD.com, it's a Chinese name. They opened it up just above the 20-day line, and so we opened up here, and pretty quickly right at the open, in fact, just a couple of minutes before the open, you had the MACD cross. Immediately it's telling you to short. And it's pretty easy to execute these trades. You see the setup. You don't know if it's going to work, but you know where your out point is, and you run it very tight. If it doesn't work right away, usually it's not going to work, and these worked right away. But then you get these MACD stretches, so I'll cover into them. And of course, in this case, they take it a little lower. Citrix Systems is another one. There's some upgrade from some stupid analyst today. They took it right up into the 20-day line. It actually opened down, and then they rally it right into the 20-day line. It comes up, and it crosses here, but I was already shorting into it here because you have these long tails and kind of a weak volume move on the little double top move back up to the highs about 20 minutes or 15 minutes later. So this is kind of hanging out. I still have a little position here. I think given the market position, let the volatility work in your favor. In other words, you don't need to take massive positions. So one of the things about this market is that even though it's just been the fastest market decline off the peak since 1929, 19 days, I think, to get to 27% or something like that. It's not that easy because there's a lot of gaps and there's a lot of sharp upside moves. And even yesterday when the Fed came out and said they're going to throw 1.5 trillion into the financial system, the market rallied nearly 1,500 points in 15 minutes on the Dow. So if you're short something, you're going to get your head ripped off. But when that happens, when I see a news rally like that, that's then when I start to look at coming into the short side. So I'm trying to be opportunistic rather than chasing things. So you get a big up opening this morning, you're up 1,100 and something on the Dow, which is a limit up move. I'm going to look around for things moving into resistance, and in a lot of cases they're just stocks that I've been working over the past few days. Like Work also is another one. This was such a gift. They had the CEO on CNBC this morning, and of course the stock, every stock on the planet was already moving up. I even saw Virgin Galactic trading above 16 at the open. Of course now it's back down to 14, and you got to wonder who's dumb enough to buy that move. But they had everything moving already, and then the CEO comes on the CNBC and they jack it up to just above 22, and I'm sitting there watching this thing going, what the hell is going on here? So to me, this looks like a short, and you get a MACD cross about 25 minutes before the open right here. If you can see that. Here's a MACD cross here, so it occurs right in here. We're just above 2150, and then boom, you go straight down, you get the MACD stretch, and you can cover down in here. It crosses. It looks like it wants to roll over. In fact, a lot of things look like they want to roll over. What's the market doing now? We're up 602, 598. I got to tell you guys something, and I don't know if other people have had this issue, but I use two quote systems, Thinkorswim for one set of quotes, and then eSignal for another. So I've got two quote systems, and what I've noticed is that eSignal is generally behind Thinkorswim, sometimes by a pretty wide margin, 20, 30, 40 seconds. So it's real tough to trade when you don't know what the prices are. So I find that a little bit of a challenge, but again, I'm not taking huge positions. I might go 15, 20% max on a position and then let the volatility work for me. And you can see in this case, like with something like Work or something like DocuSign, the volatility works pretty well for you right off the bat on the 620 chart. What's up, Dr. K? Did you say something?
No. There's
Okay.
just a lot of people trying to get a hold of me. Don't be distracted by all these sounds. I'm trying to turn them off, actually.
Okay. Yeah, I hate when that happens. Anyways, you can see you got some pretty quick velocity, so you can let that work for you. You get a couple of bucks on something within the first 15 minutes. You can actually cover and take the rest of the day off, and because you usually go into a chop zone. The typical pattern for the market on a day like today is they have a big gap up, So these are what I call the reflex rally patterns, and you have a big gap up, then it'll come in, and often that's kind of sucks in shorts. But if you're a nimble short, you catch the quick move to the downside off the peak at the open, and you cover. You don't get piggy, and then you sit back. So now I've got a cushion. I've got a decent cushion this morning. I'm only sitting on one short position, so I'm still working the Citrix here. But I got short this thing up near the 20-day line, so I've got a good cushion. But to me, it doesn't look like it's fully broken down. And I'll just hang with it and see what happens here. But it's not a big position. It's about 15%. So I'm not running a big, massive position. My theory, though, is if the market reverses, it's heading back to 100. So I should get some good leverage out of that using the volatility to my favor, okay? Anyways, let's see. We got a fair number of people here today, so no questions yet. But, you know, this is basically what my strategy is now that we're so far down, is I'll look at stocks coming into resistance. And if you look at, say, Citrix here, you had several shots up here early in the week, and then finally it worked, and you had one rally yesterday into the 20-day line, and then boom, this thing broke hard. So if you can catch that, you can make some quick, quick few points and then cover and go away, because you are in a position also, and this sort of complicates things a little bit, but not terribly so, because if you just set up properly using a setup where you're very close to a reference point, like a moving average overhead that you can use as a covering guide, then you're going to be fine, because as long as you stick to it. If you don't stick to it, that's another issue, but you have to be very nimble, and if it pushes you out, just let it push you out. And possibly it'll come back later and roll over later, maybe at a higher price, maybe slightly lower. But what you're trying to do is catch the high velocity move. If it doesn't happen for you, then let yourself be stopped out. The biggest mistake you can make on the short side, especially when the markets come down 20-something%, is to sit there too long on the short side, because they'll rip your head off, Anyways, is JNUG dead? I think just about everything is dead, and that includes gold. I still own my core position that I bought in 2000 under $300 an ounce, but I was playing this, in here on this move, and you get a double top move and it comes down. But as I said before, when everybody rushes to liquefy, which is what forced selling does, it forces everyone to liquefy. So they just got to raise cash, period. You got to meet margin calls, you got to shore up your balance sheets. Financial institutions may look to increase reserves, etc. Then they're going to take everything down. So I think in the case of gold and silver, you watch for entries coming in at opportunistic times, because I think if the Fed goes to zero, and with all the money printing going on, at some point it's going to have to dislodge the dollar in a big way. And you can see that the dollar is actually rising, but I think that's mostly as a safe haven, because people are worried about other countries and other currencies because of the coronavirus thing. So anyways,
yeah, I want to say that the U.S. is still the dollar is still the reserve currency, and therefore it makes sense that the dollar's rallying. But keep in mind, in 2008, when everything got killed, gold even lost 1/3 of its value. Gold was the first instrument to bounce,
right,
V-shaped bottom, and return to new highs. And that only took a few months. I think it already reached new highs by early 2009. And I think this time around we're going to see that kind of action, not just in gold but also in Bitcoin. Fiat is being debased faster than ever before. So it's kind of a mathematical certainty that that all this capital that's on the sidelines, everything's being sold out right now. It's gonna swing back. It's gonna move back into something substantial. Just knowing that, also, even after all these rate cuts, there's still a lot of problems, and so it's not like these rate cuts can be reversed. In the last 11 years, since 2008, so 12 years, when QE started first in the U.S. There's really been virtually no reversals. I mean, the only time the Fed tried to unwind all this debt was in what was it, late 2019, when we had our first Christmas crash as a consequence of trying to tighten too much. And they didn't really make big moves either. They were tightening in baby steps, but the markets wouldn't have it. So I think going forward, we're going to probably see more even more rate reductions or more stimulus in some form, which just means the devaluation of fiat across the board.
Yeah, I don't, I mean, you look at here's gold, and it came crashing down with the market. It made a double bottom. You had a kind of an undercut and rally, and then it rallied. So that's where it started the big move, and it really hasn't looked back since. It has been in a big correction for a while. So I'm skeptical about Bitcoin as some sort of great alternative currency. I think what's going on now, if you look at this thing is down more than 50% in about 3 weeks or so, whereas gold is only 10% off its peak. And I think that just points out the illiquidity of Bitcoin. So, you know, to me, it's just a trading vehicle. You can't buy anything with it. And so people, go ahead.
Bitcoin is its store of value is the killer app. Its ability to transfer borderlessly, so it's not going to go anywhere. I mean, in other words, it's not going to disappear. It's not going to vanish. It's going to have that use case, which is growing ever more powerful, especially with these central banks.
Yeah. So, but why is it declining? You know, it's like you're sitting there talking your book. You're talking your book when the technicals are telling you something entirely different. So why ignore the technicals in favor of a marketing pitch? You know, it sounds like BS to me, to be frank.
Historically speaking, if you look at Bitcoin, these kinds of moves are pretty common, and if you go back to 2011 and you see every year since then, big moves in Bitcoin are very common. It's a risk-on asset. It is a speculative asset any way you look at it, so there's going to be a lot of reason to want to sell out of these sorts of assets, but it doesn't in any way negate the underlying use case. Therefore,
but that's just
an opinion. Better the deal.
That's just an opinion. That's not technical reality.
That was okay. That
is that it
sounds like a broken
50%
record from 2013. 2012, 2013, 2014.
But so what? So is Apple, you know, so is Amazon. That doesn't take away from the fact that you don't want to own them right now. Period.
I agree with that.
Period.
I agree that
and I don't
want to own.
Okay, and I don't necessarily agree that there's some long-term case to be made. You know, like Tim Draper saying in 5 years we're all going to be using Bitcoin. Yeah, he was also a big backer of Theranos and continued to defend the company even as Elizabeth Holmes was being sent to prison. You know, so I don't buy all this BS. It's a lot of hype, and I would say be careful. Just be careful. Pay attention to what you see on the chart. Forget the marketing presentations. Forget the marketing pitches. Forget the people promoting it because it's part of their book. Screw that. It's this puppy's a short, and I've been trying to borrow it, and I can't.
I'm going to say the same thing as I said when I made a prediction that Bitcoin would hit 10,000, which was considered ridiculous and ludicrous. And Bitcoin's crashed 94% twice, and it tends to crash over 75% when it does have pullbacks. So this is a 50% drop. This totally seems within line of its historical performance. There's nothing in my metrics that is showing otherwise. There's nothing to get alarmed about. Of course, you don't want to be sitting in positions and stuff that's going to be dropping X%. Depends on your risk tolerance. Simple. Right. So, you know, this kind of market where you don't really want to have exposure to anything, including gold, because everything's getting sold out, you know, baby in the bathwater. So I'm in agreement there, but long term, I still don't see any change in the value of its use case and what it's providing. So, I mean, blockchain's not going to go away. I've had a lot of people ask me, you know, blockchain this and that.
And neither did the internet. So, but that, you know, to me, that's all just part of the marketing presentation, Dr. K. You're just like, oh, it's not going to, blockchain is great. Blockchain's in, the internet's great too. And a lot of things failed. This could go down a lot more. And I don't think people should be anywhere near it.
I had this argument in 2001. They said that the internet's done. It was a fad, blah, blah, blah.
I didn't engage in that argument with you. And the other thing is the internet has nothing to do with what's going on here because the internet had a lot of phony companies that went to zero. And you don't know which of these cryptocurrencies could go a lot lower. And that's really my point. It's technical reality versus a marketing pitch. Okay, that's just the way I see it.
If you look at my writings, I've said pronouncedly many times that most of this stuff is junk. Most of crypto, I've said this, and this is documented.
But listen, you sound like some guy on TV just defending his book. That's what you sound like.
Not at all. I'm not defending book. I'm defending reality, and most people can't see it.
Reality right here. Reality. Let me circle it for you.
that does not illegitimize Bitcoin and its underlying use case. That's my
Well,
point. But I've
it doesn't
said
illegitimize
this
any
time.
of it. But the point is, it could go a lot lower. It's not a
Of course
matter
it
of whether
could.
it's legitimate,
It's
it's a
in a
matter of
down.
where it's going. Right now,
Hello,
right
it's in a
here, right
downtrend.
now.
Hello, it's in a downtrend. So you don't want
Okay,
to
here
be in
come the
stuff.
votes. Here come the votes. Somebody says Gil speaking Bitcoin truth. Who else? Only one person wants to
It
stick
depends
out.
on.
See, I'm a
I
truth
asked that
teller,
person to
not a
evaluate.
crypto marketer, god damn it. Anyways, let's get
I
back to
would. I would ask.
stocks. I
I would
think
ask
this
the
is
person
going
to
lower. Do you think
evaluate.
it's going lower, yes or no?
It should go lower
All
because
right,
that's the
that's all
downtrend.
we can agree
It's in
on
a
that.
downtrend.
Let's leave it at that. So,
But obviously, this is this is mental masturbation right here. All you need to know is what is the trend. That's
all
it.
right,
Now,
exactly.
all the other discussion is interesting,
But
especially if
irrelevant.
you're a long
Right. All
holder.
right. Okay. All right.
But
All right.
for
We're on the
traders,
same page there now. Okay.
the trend.
I'll give you more crap about it later. Anyways, but only one person said anything about it. Just so you guys know, we don't always agree on everything. I think that's healthy. But and there's no party line around here. Okay. I mean, we're not a major brokerage firm where everybody's got to speak the same party line all the time. And I think part of hashing it out is part of the process of getting to truth. But just wondering if Bitcoin could go bust, because very thin market and I can't do anything with it. I love it when it goes up and I can trade it. I love it because I can't short, I can't borrow unless I go for the Bitcoin futures, which uh, I'm not really willing to do. And I can't borrow this, so I'll trade it. But I don't really. It looks to me like there could be an issue. Look at the Dow's up 287, and I'm wondering also, it's just telling us that the whole financial system is at risk here, and it's like the pirate map. Here be monsters, and we don't know. Anyways, somebody says, "Oh, loving this argument." See, that's what we should be providing is a good, lively discussion. I like it. Okay.
Vigorous debate is healthy, always.
Yeah, well, you suck, buddy. That's all I gotta say. Anyways,
Yo mama.
yo sister. Oh wait, you're an only child. Never mind. All right, could you speak about what you would be looking for technically, and possibly speculate on a likely timeline for entry based on historic precedents into Tech L or TQQQ? Many thanks. Yeah, a market bottom. I don't know. I'm not buying any of these right now. TQQQ. What would you look for? You'd look for a market bottom and turn. Actually, no. I take that back. I would look for the moon to be in the 7th house and for Jupiter to align with Mars. And the other day I was out running at 5:30 in the morning, and I noticed just above the horizon, maybe about 35, 40 degrees, Jupiter and Mars are really close together. So they'll be aligning soon. At that point, you can just go hog wild with the TQQQ. Okay. How's that? I mean, how the hell do we know? Let's look at the weekly charts here because this might give you some insight into what's going on. So let's just use the Qs here. Feel free to chime in, Dr. K.
Sure.
Let's see. Another thing that's kind of disturbing here is e-signal. Notice how slow it is bringing up a chart. Okay, you're coming into this low here. So I don't know if this is a major low that triggers an undercut and rally move. At some point it will, but you also have this low here, and it may get to there first. So that something like that might be something to watch for. But it's interesting. People still want to get long this market. I also find it interesting. A lot of people want to come in and start buying rather than shorting. I'm not getting a lot of people saying I want to short. Oh, look at I'm watching something like MasterCard here. Let's see here. That reverse hard. See how all these things are just big tails? Anyways, getting back to the Qs. So let's look at that. Now let's look at the SPY and where we are in the grand scheme of things. See how long these charts are taking to come up? We may sit here for a few minutes.
Yeah, I'm having the same problem the last several days on eSignal.
Yeah, it sucks. But I'm glad I have Thinkorswim because those are the correct prices. How do I know? Because when I put an order in, it hits the bid on a short, it hits the bid that's showing on Thinkorswim, whereas the bid on eSignal might be 30 cents higher or 30 cents lower. Now here we got, okay, the S&P is heading for this low. Okay, so that is something to keep an eye on. And I think that's really what you're looking at in terms of lows. Let's look at the Dow. What's the, oh, DIA, right, the diamonds. You guys should have been around when Dr. K and I used to argue at my kitchen table while taste testing vodkas. It would get to the point we'd start throwing shot glasses of vodka at each other and then trying to light each other on fire. Remember those days?
Oh, that's funny.
Or
I
when,
do
I think,
remember.
you know, we just got rid of the table where we were shooting off mini missiles. Remember that?
Yeah,
And
yeah,
doing
yeah.
vodka shots, and mini missiles set the table on fire and burned a spot on it. I don't know if anybody knows what a mini
Right.
missile is, but you can make them out of matches and tinfoil. Look it up on the internet. They're really fun. We're shooting them across the table at each other. Anyways, so here you got the Dow is undercutting this major low here. So that is the December 2018 low. So maybe that triggers an undercut rally. But so far, the Dow's up 308. We're in about, what, 70% of today's opening rise. And this doesn't look good, does it? Look at DocuSign heading lower. Work is heading lower. Everything is rolling lower. Somebody pointed out just right now the ZM has busted the 20-day line. Yeah, it's starting to break. And if you look at ZM, it's a pod. It's a punch bowl, but it's starting to confirm as a punch bowl of death or a pod as it breaches the 20-day line. This may be it. So I think also other stocks that you need to look at, pods are AYX. Same thing. You can see it's not quite deep enough, really. I think it's close. It might be 40%. But you know, to me, a punch bowl just needs to be something that looks very deep. And the main characteristic it has is a rapid decline followed by a rapid ascent. And the whole point is that the rapid ascent sucks in bulls right here. So it's a bull trap on a breakout, and then it fails, and then it breaks down very hard. And this is sort of like textbook pod-like right now. I mean, look at that break. So we're getting punch bowls of death, pods that are acting the way they used to back in 2008. So anyways,
There's, I think, so much vulnerability right now because of first of all, you got the psychology, which is about, I mean, it's getting, it's accelerating to the downside in terms of the views of people. It's accelerated by the mainstream media, which is capitalizing on all the negative waves that have come and that are on the way. So I think that, I mean, this rollover today that we're seeing doesn't surprise me one bit. Yeah, I mean, the place to be is either on the short side or in inverse ETFs. But keep in mind that we have so much volatility that overnight, carrying a position overnight will make you prone to huge gap ups and gap downs. I mean, a gap up could be from vaccination, some kind of containment of the virus, or certainly as the weather warms, the number of cases will drop, and I mean, the virus will run its course. So when that light at the end of the tunnel starts to really shine through, then I mean, that I think will reverse a lot of the extreme oversold quality. But that might not come for another few days, maybe some weeks. And in the meantime, things could get a whole lot worse, because we know what happened in 2008, how fast things unraveled. And I wouldn't be surprised to see the same thing here. So again, I think the short side is your friend where we stand right now.
Yeah, I want to address a good point someone's making. Someone says, Gil, you are to the point with the reality. I got nearly wiped out in JNUG and GBTC and USLV based on Dr. K's documentation, which I don't really know what that means. But you know what I would emphasize here is, like, where were your stops? You know, if somebody thinks something's going higher and you have a selling guide, fine, you know. But if you're buying something and then you're going to hold on to it because you think somebody that you think is a guru is going to be right, and you have no selling guide, you're going to get destroyed. And that, you know, but all of these is JNUG is a stock, a gold miner ETF.
JNUG is the junior gold miners to 3x, and with all these things, as I've always advised, first of all, you always have to have your stops in place no matter what. And that where you put your stops depend on your risk tolerance levels, which varies depending on whether you're short term, day trader, swing trader, or position trader. Some people are longer term and they use a longer moving average, and that's fine. But you got to have a stop somewhere. Now, JNUG gives you the most upside of any gold related or precious metal related ETF. So the idea, of course, is that because we're in a money printing environment that's accelerating, gold and junior miners and regular gold miners, they have a high level of correlation if you look out over the years. So there's been a decoupling from the junior miners from gold, a clear decoupling, and this is highly unusual. Nevertheless, it's happened. It's a black swan that's happened, and therefore your stops work. Stops always work. They should always be obeyed. And I mean, this is excessive. What's happening to not just JNUG, but all the junior miners are all suffering huge losses. And it doesn't.
They're stocks. In the end, they're stocks, and they become sources of liquidity.
But yeah, basically these things still exist. They're not going to go to zero. They're legitimate companies. They're legitimate operations. They've been around for many years. So I mean, this reminds me again. This is 2008. Some people may remember of some companies such as major car rental company, Avis. The breakup values just on the car fleet alone in this company was it was $1 billion or something. It was a huge number. Now things got so oversold in 2008 that the value of this company, the value of the stock, went down to like $90 million. I mean, it was ridiculous. Even though the breakup value, the cars alone was in figures. So where did it go from 90 million? It was one of the best, if anyone ever bought it, it was one of the best trades one could make because the stock collapsed to I think like 80 cents. And then by 2011, the stock was all the way back up to like $90. So you would have had a 100-fold gain by buying it at those extremely ridiculously low levels. But keep in mind that stuff can go like that. That's what I'm seeing here with the junior miners. They're getting so hammered, overly hammered, but you don't know where the bottom is. I think overall these things are going to be a hell of a lot higher, 6 months out, a year out. But at the same time, it's a different style to be, trying to catch that falling knife. That's not a trading style I use. I like to see some stability before I enter a position.
And I would say if you were long it up here, once it broke down, you had to be stopped out. So if you buy something without a stop, I don't care who you think is telling you to buy it, but I think it's kind of naive to think anybody, even Bill O'Neill, because he used to make a lot of mistakes, is some sort of guru so that you just buy it and hold it, whether it's JNUG or Bitcoin or anything. You have to have stops, So you say you also got stomped on Bitcoin, but for me, I was playing this thing here, and once it could not hold a 50-day line, to me that was like, exit. Then you had an undercut and rally attempt here, which failed here, so exit. And now it's coming in. So there are plenty of places where it was telling you to sell. So, take responsibility for your trades and set your stops and stick to it. Now, the other thing you guys might recall is that I told you several times that I don't like to buy gold mining stock ETFs. Why? Because they tend to be very, very different. I'm something of a gold bug from the perspective of I bought a large physical position under 300 20 years ago. So I'm into gold, and it's shiny and it's cool looking, and I can whip out my gold coins that I don't keep in the vault to show to people, and everybody's always oohing and eyeing. I mean, gold looks cool. So anyways, but the whole mining thing, there's a lot of variation in costs, and what's going on now is I think that they're just getting sold off with everything else, just like the GLD itself. But you'll notice the GLD tends to be cushioned a bit more than everything else, which is why I just prefer to play it straight rather than trying to go for individual stocks. I mean, you can catch a Franco-Nevada, but it's a pure play, so that one has worked well up until the break, and it correlates very much to the gold break. So I think GLD is probably going lower. In fact, I tweeted this morning it's probably a short around 148, now at 145.32, and the Dow's up 161. So we're probably going to roll over. Then we're going to go down 10,000 points. This should be really fun. So I'm actually short Docu again. I decided to come after it about 74, 73, 71 or something like that. Anyway, 73.83. Anyways, coming down a couple of bucks now. Somebody's saying they're having the same problems with TradeStation. More people chiming in. It works for him, but for most people, reality is what works. Follow your stops. Theories are good, but reality is what you are pointing out. eSignal is having huge issues, somebody says. I've been on the phone with them multiple times. They do not know what the issue is. I know what the issue is. They suck. Anyways, blah, blah, let's see.
They need better servers. They're probably so many people taxing the system, and then they're not prepared for it, is my guess.
Yeah.
But I wanted to say I mean, here's the thing with when you're bullish on something, when I'm bullish on something like gold and all its counterparts, I want the best time value. The best time value is a 3x JNUG, but you might not want to have that kind of exposure because it's the most volatile ETF as well.
And what I like about the too, that's the main point.
Yeah, that's the main point. But what I like about the junior miners and the miners and gold is if you look at the long-term chart, the reality will show you that when you're in an uptrend, the junior miners will give you the best profits. So if you're bullish, my logic goes, well, I want to be in the fastest horse, and that's how I play stocks as well and crypto. I want the fastest names out there. So, but the important point is that there is a high level of correlation if you look back over many years of gold miners and gold junior miners. There's a high level of correlation. You're not going to sit in these things for a long period because one's going to lag over the other. But in the interim, in the uptrends, when there is a strong market, you are going to find that the junior miners give you the most upside. And they also, I would add, give you the most downside when the trend is not in your favor. But by then you're stopped out. You're stopped out of your position and you take your profits, or at least you mitigate your losses. Geez, gold right now is working its way down quite substantially as we speak. You know, it smells like 2008 again.
Yep. More than that. And somebody says, I love some of the comments now. And here I thought you two were highly intelligent, thoughtful people. Well, there's another reality shock for you. We're not. We're vodka hurling morons. How's that? Any idea how 0% rates affect TLT? Seems like its move is done. I think it's a move to liquefy. So everything must go. And bonds are getting destroyed. You know, I had a broker friend last week bragging to me that he's pitched his clients on municipal bonds. So he's got all his clients in munis and also high yield corporates. But he was bragging to me on this day, oh, look at my muni bonds are rocking. I said, you know, hit the bid, dude. This is a little bit of an aberration when it pokes up like that. And I would just dump into it. And of course he didn't. So now his clients are getting brutalized. The other thing he was all excited about was high yield bonds have done well for a while, but now they are getting destroyed. So there you go.
Yeah, that was a very telling chart about the MUB.
Yeah, I don't think the 0% rates are doing anything right now, but you've got to rush to liquidity, and that's driving, that overcomes everything. That cancels out anything and everything. Anyway, somebody says so.
I wanted to say real quickly that back in the day when I was at O'Neill and I met Dan Morris, and he was like, you know, one of the first market wizards I ever knew personally and made friends with. And what I realized about him and O'Neill, both of them, it didn't matter who you were, their success rate. I think O'Neill's success rate, even in strong bull markets, is at best 50%. So he's wrong half the time. The key difference is that he stops himself out. And Ed Seykota always said that 3 most important rules in investing are risk management, risk management, risk management. So there you go. There are no gurus, in other words. There is no one out there who has no one, you know.
I know there are people out there trying to sell you on the concept that they're a guru and subscribe to their website and they'll tell you all the things you have to do. I think that's a fool's game. Anyways, somebody's asking which vodka won. I think my favorite vodka is Monopolova, which is a potato vodka that comes out of Austria, and it's like $12.99 for a fifth, so it's not expensive. I think some of these vodkas, these designer vodkas are a little bit overpriced. There's one, Cutwater is a very good potato vodka. I would suggest. I like that one a lot. So, and then of course there's Pau, which is made from Pau in Hawaiian means done. So this one's made in Maui, P-A-U, Peter Apple U is the vodka. It's actually made from pineapples. I mean, you can make spirits from any sugar. So, you know, pineapple sugar works just as well. Anyway,
Patoki vodka, amazing potato vodka used by one of the best vodka cocktail mixologists in the world. He keeps winning the championships. He used to work in London. Pataki vodka.
I've never tried that one. I have to try it. So somebody says the best vodkas are potato based, no hangover. Yeah, that's always been my perception as well. So it's not just me. Anyways, Dow's up 123. I don't know. Is it going to roll over? Maybe, maybe not. I don't know. This is all messed up. So, anyways, everybody try to stay healthy. I'm lucky because I don't have a real job, so I don't have to go anywhere. Although it's fun going to the stores and seeing all the hoarders running out with toilet paper. I think we need a toilet paper ETF. Symbol POOP, P-O-O-P. I thought that was pretty funny. Somebody said that. Vodka is the best vaccine. I agree. Oh, is that who I think it is? Is that Pascal? Yeah, Pascal. Good to see you there. Haven't seen you here for a while.
Oh, Pascal. Wow. It's been a while.
Pascal Villain, he published a very interesting book. I forgot the name of the book. Pascal, what is the book? So I think people should read it, though. I think it's very interesting, and he has a website.
Effective volume. Something about effective volume. He was the creator of effective volume.
Yeah. So interesting stuff. So let's see if I can find it real quick, and then we're going to sign off.
Here it is. Value and Time: Better Trading Through Effective Volume from 2008.
Right here. See that, Pascal? I bet you didn't know that you were going to get a free advertisement. Here's his books. I think they're good stuff. You should read them. End of story. All right. Anyways, that's all I've got for now. Market is crazy. The world is crazy. But, you know, this too shall pass. I notice everybody says that. I think it's getting a little bit tired. What if it doesn't pass? What if we all die? Then, you know, all your problems are solved at that point. Anyways. Zubralka, someone's pointing out, as a vodka. Z-U-B. I'm gonna have to try all of these. Anyways, but that's it for now, you guys. I mean, Dow's up 173. We could see this thing roll over. If it does, we could head a lot lower. So be careful, and above all, set stops. Whether you're going long or short, set your stops and stick to them, because this is the kind of market where if you don't, you can get your head handed to you. Anyways, that's all for now, you guys. Thanks for showing up. Have a great weekend. We'll catch you next week.
So long, everyone.